Whether you are a phony retired person, a typical retiree, or someone with a day job, cash flow is more important than net worth, particularly during a financial decline. Net worth is typically an impression that just aids to improve your ego when times are great. When times misbehave, computing your net worth loses its allure due to the fact that it primarily injures your ego. Throughout a financial downturn, if you don't buy cash-flowing properties, your profile will likely underperform. If your financial investments likewise have weak balance sheets, then they will likely underperform also further. The starkest performance difference throughout a bear market is in between growth supplies and also return stocks. For that reason, if you are a development investor, it's important to take some earnings when times are good to record the outperformance. Or else, growth capitalists will not ever before have the ability to capitalize on their financial investments given that they receive no returns. When growth firm CEOs like Elon Musk and also Satya Nadella were dumping Tesla and also Microsoft stock aggressively near all-time highs, it's worth listening. Why capital is more vital than total assets. The value of an investment is based off its existing as well as future capital. Never forget this reality. Eventually, an investment needs to produce revenue for its owners. Or else, the financial investment is only based on the better fool concept. As a private, your cash flow is what enables you to do what you want. Capital is actual whereas net worth is subjective. Do you consist of the worth of your key residence in your net worth? Naturally, should you determine your total assets on a pre-tax or post-tax basis, do both. What should the value of your personal organization be in your net worth? Best to be traditional. Therefore many more factors to consider for computing one's net worth. A subjective total assets is why it's unfair to tax obligation, unrealized capital gains. Your investments may be worth X one day and X minus 70% several months later on. The market is unpredictable. Certain. If you collected a huge enough total assets that generates no revenue, you could merely draw down major to money your lifestyle. Several do. Nevertheless, this course is riskier as well as less dependable. Because if your net worth creates no income, then it most likely consists of more unpredictable assets. The primary exception are rare earth elements, and also probably to a lesser level, art and collectibles. My preferred free capital investments. I love real estate and blogging one of the most since they are two assets that produce strong cash flow. While valuation multiples expand an agreement, I'm busy focusing on complementary capital and also development to spend for the lifestyle I want. Real estate is my favorite cash flow investment partly as a result of the solidity of its rental earnings. Everybody requires a location to live during great times as well as bad times. And also by the time leases more than bearish market are normally over as well. Not just is real estate income fairly stable, you can remodel your rental residential property to produce more cash flow also. The capability to do something about it to improve rental earnings is extremely eye-catching for able-bodied people. Considering that I would certainly never sell a strong cash flow business in a fairly low interest price atmosphere. Its rising and falling worth is background noise that doesn't matter. What someone agrees to pay for something is both uncontrollable and subjective. Yes, it's occasionally enjoyable to daydream regarding having the ability to sell financial samurai for big bucks as well as ultimately get my coastline frontmanor that will at some point fall into the sea. Nonetheless, what a pity to quit something fun to run that's been a part of me given that 2009. Various other appealing cash flow investments. My third favorite totally free cash flow investment is large cap, dividend yielding supplies with strong annual report. The dividend aristocrats are 65 companies in the S&P 500 that have paid dividends for at the very least 25 successive years, and also have actually raised rewards for a minimum of 25 straight years. You can conveniently buy a reward aristocrat ETF like NOBL to record their reward income. The wonderful feature of investing in return stocks is its 100% passive nature. There's absolutely nothing you require to do except effectively designate your capital. The disadvantages to buying return stocks are the inability of the capitalist to take positive action, being at the mercy of firm monitoring and exogenous variables, as well as more volatility and lower yields than real estate. NOBL, for example, only has a reward return of about 1.9%. Lastly, I'm an expanding fan of purchasing exclusive property funds that create greater returns in 100% passive manner. Purchasing private funds is also much less demanding since there aren't everyday market value updates. Public REITs, on the other hand, are frequently as volatile as stocks. With exclusive real estate, you are investing over a 5+ duration time horizon. The older I've gotten, the a lot more I like purchasing 100% easy realty investments. Fundrise is my favorite realty investing platform as it has actually branched out funds that purchase heartland property. The fad towards relocating to lower-cost locations of the nation will proceed for years, thanks to modern technology. Net worth is more of an energy-determining stick. Given that creating the blog post, the initial million might be the easiest over a year's back, I have not spoken much concerning my total assets. The main reason is that after blogging about a $3 million net worth, it drew excessive adverse power. This conflicted with my confident nature. Nevertheless, at the time I felt it was essential to share my net worth number to offer visitors an idea of how much it might take to create $80,000 a year in passive earnings. Numbers are essential when discussing money. Otherwise, it feels too much like fluff. What matters way more than my net worth is your net worth. Nevertheless, my objective is to help you build a lot more riches. One of the most helpful reasons for determining total assets might be to offer you a sense of momentum. The better your net worth, usually, the higher your passive revenue. If not, at least with a higher total assets, you have a higher ability to generate even more passive revenue depending on just how your net worth is structured. Momentum helps keep you encouraged. It's very easy to diminish the economic independence trip by splurging on points you do not need with pricey financial obligation. The relevance of inspiration is why I proposed for novices or late beginners to very first shot reaching $300,000 in financial investments. As soon as you reach $300,000, you'll start getting that economic independence sensation. And also as soon as you get that special sensation of flexibility, you will not intend to quit. Getting to $300,000 is far more digestible for people initially beginning than getting to $3 million. When you get to $300,000, getting to $500,000, $1 million, $2 million, etc. no longer look as complicated. The biggest advantage of a huge total assets. The bigger your net worth, the much more positive you will certainly feel regarding your finances. Nevertheless, just like how technology supplies can lose an incredible quantity of their worth overnight, it threatens to be extremely certain regarding your approximated total assets number. The most significant advantage of a huge total assets is having much more options to develop even more easy income if you want. The need to create more passive income will depend on your age, power, and wishes. As a person that does not wish to dedicate to a 40+ hour job schedule while my kids are still young, I've structured my net worth mostly towards cash flow generating financial investments. I don't intend to run the risk of excessive because of a strong concern of wasting time. Consequently, right here is my total assets malfunction. Omitting my online properties, 50% of my total assets is in real estate, includes my main, 20% in dividend-paying supplies, 10% in municipal bonds, 3% in Endeavor financial obligation. To put it simply, concerning 70% of my total assets remains in financial investments that generate cash flow. 30% of my net worth is debt funding that generates no income. These investments primarily contain my key house, individual tech supplies, and exclusive equity venture capital. The more powerful your cash flow, the less you will need to buy cash flow generating properties, as well as the other way around. Considering that leaving my day task in 2012, I've been conditioned to invest in cash flow properties out of necessity. With the growth of Financial Samurai, I've had the ability to take more risk. However, I'm still predominantly focused on turning as much active revenue into easy income as possible, due to the fact that ultimately, I know the great times online will concern an end. Constantly turning bad money right into real possessions is just one of the very best ways to get rich. Fake currency conversion is one of the reasons that individuals that obtain massive stock windfalls acquire manners and also art. At the very least, they know their estates and Picassos will certainly be about long after their firms go bust. Ways to increase capital. Right here are some ways to enhance capital. Feel free to share much more concepts. Designate more funding toward higher yielding financial investments. Increase work output as well as performance to earn money extra at your existing employer. Task hop to a rival for A.